and you can just ring up the mint and say, hey, it's on the way. Marketing's simple, offtake simple, production is simple. Copper, lead, zinc, tin, tungsten, any of the metals, the old traditional metals with an LME market, established market, are pretty good as well, and that are based around the use of flotation, which is well proven technology, reasonably easy to get into it. A little bit more complex are the bulk products because of the larger requirements in environmental and social licences. Iron ore, manganese, heavy mineral sands, bauxite, fertilisers, kaolin, silicas. There's an established market and they're moderately easy to finance, but they still take a while to get through that permitting stage. Energy projects are great. The problem with them is political barriers, and congratulations yesterday to Peter Dutton and his Liberal team who've come out and said that we're going to have, if we have a Liberal government, then we're going to have nuclear energy. Oil, gas and coal in the good state of Queensland are pretty difficult. They've tried to tax it out of existence, but the demand is there. The established markets are there, and they're relatively easy to get into production once you get past that political barrier. Uranium as well also has a political barrier, but also is very important and used in every T20 country in the world. The emerging minerals are more difficult. And this is because the market is dominated by China. And this is what, by calling them critical minerals, governments are trying to avoid, is to try and avoid the end up, these products, these concentrates, let's say, going to China for further processing, so they come out as Chinese goods. Lithium is probably the easiest of it because we're now starting to see process plants in Western Australia. It's reasonably well established with the brine production in Argentina, and we'll start to see over the next couple of years also plants in Canada that will be able to produce the spodumene into lithium chemicals in that area. So that's getting easier. What is tough are rare earths. Now, you'll see a lot of companies out there, they've got these clay rare earth deposits. It's nice. They can make a mixed rare earth concentrate. Then who's going to buy it? It's probably going to go to China. So why is Albo putting money into projects that are going to end up being sent off as a concentrate to China? Don't get it. Nickel and cobalt are reasonably difficult because of the domination of the way the market has been dominated by China with Indonesia. And that is a rather difficult area now to get a project financed. And graphite and vanadium are probably the hardest of the lot. There's really no market for graphite concentrates. You have to take it through to a end product, a battery anode material, and that takes a long time. If you can look at all the ASX graphite companies, you see they're just spinning around, and through that section C, and it's very difficult in that area. So it's very important to select the areas. If we look mostly where a lot of the buzz is at the moment in rare earths in Brazil, good geology, but longer term, it's a great deposit, that alkaline complex there that everyone's pegging around. But longer term, there are development risks, and the question again is, where does it go to? So we've seen rare earth stocks come down 20% year to date, but those in Brazil have gone up 3.3%. So you can see how promoters are pushing the rare earths in Brazil. Pleased to see that, I think they're here, Red Metal have got some rare earths here in Queensland finally. It's great to see. And I think the ones in Western Australia also great. I think this venture is one that you should have a look at in rare earths, because there are developing plants there, both at Kalgoorlie and also at Eneabba. And so eventually they'll get through to where we're not so dependent on these commodities going through to China. Remember last year, the lithium in WA and Canada, well, you know, what killed the lithium industry was companies that, these metal analysts that produce market statistics, and they come out and make hockey stick projections. Avoid hockey sticks. They're good in a hockey field, but they're not much good in the minerals industry, because eventually the demand will not be there at that level that they predict. And so we've seen lithium stocks go down year to date 11%. and those in Western Australia down 42% after Gina and some of the big companies decided to get in and buy some of the juniors. And Canadian lithiums are down 23%. So again, it's a question of picking the right commodity at the right time. Now, the other thing is to look at how has the share price in those commodities moved with respect to the commodity price itself. And if we look over the last 3 months, which is probably a pretty good time frame to look at things, we'll see that the commodities there in green, the commodity prices underperformed the commodity prices overperformed the share price. So particularly manganese with the fact that Groote Eylandt is offline has made a big hole in the supply of manganese ore, and there's great opportunity in that. The price of manganese ore in the last 3 months has gone up 84%. The shares are up 13%, but there's still great opportunity in that commodity. Tin's the same. Tin metal has gone up 21%, yet tin stocks are up 6%. So have a look at those on the west coast of Tasmania. They're probably your best bet. The other ones, oil and gas, down 4.6%, but look at natural gas. The demand in the last 3 months of natural gas internationally is up 63%. Nickel, the price of nickel and share price is down 5.8%, but we do see there's some encouragement and rise now in the price of platinum, up 4.4%, and nickel up 0.4%. Now it's a commodity over the last 3 months. But have a look at last week, we saw quite a big slide in a number of commodities, which caused that downturn in the industry. But we still saw tin go up 4.4%, gas go up 3.5%, Brent crude up 2.9, manganese ore up 1.6, and thermal coal up 0.4. Some of those are, hydrocarbons, but geez, a great place to invest. So, in commodity selection, the bigger the demand, the easier it is to secure an offtake. So we have the A team, which are oil, coal and iron ore. We use massive amounts of that, plus well over 1,000 million tonnes a year. The B team, aluminium, copper, zinc, lead, nickel, they're good to invest in from the point of view that there's a market, so there's easier to secure an offtake. And the hardest ones, of course, are the more critical minerals in Section C to get into a market. So it's important to remember that, because although politicians and conservationists suggest we should order this supply ratio, none of us, the tealest teal and the greenest green, will not change our lifestyle. The teal, the doctor's wife in Sydney that votes teal, will still want to go in the sharp end of the aircraft off to London every year. And the green, off to Bali. The thing is, we use 50 kilos of material each day out of this earth over the life of our lifetime. That's what we use. That's what comes out of the ground. That's what the geologists in the room have to find and develop up to get ready for mining every day for mankind. Because we do use resources, and the average person that lives in the inner city has no comprehension of how much it is involved. Now, the critical things is we need funds. Explorers need fund. What we do at Austex, we do put together all the 5B cash flow reports, and this is from 780 odd emerging companies. And if you have a look at it back from 2017 when we started to now, we had the big peak during the COVID time, and it's come down, up and down, up and down, to where in the first quarter of this year we were able to raise $992 million, as against $3 billion in the fourth quarter of 2021. So there's less funds in the companies, there's less opportunity to drill, there's less opportunity to make a discovery. We need to look at where those funds are being raised and what commodities. The most money raised in the first and second quarter of 2023 was in gold, and in the third and fourth quarter was for lithium. In the first quarter of 2024 it was for uranium, but the price of uranium since then has fallen 8%, so there's less interest now. It did have a peak. So these these opportunities, they come and they go. There were gold, lithium, then uranium, and it's important to keep up to date every day, and that's why we bring out the AUSTEX report every day to help people. The largest capital raisings in the first quarter of 2024 are listed there. Deep Yellow, who are planning to develop uranium deposits both in Namibia and Australia, raised over $140 million. Syrah, geez, how many capital raisings have they had for that graphite show in Mozambique? Back again, drinking at the well for another $50 million. Renergen, it's a good helium and natural gas project, raised $44 million. Peninsula on an ISR uranium project in Wyoming, raised $42 million. And W1 Resources, who were just in the news this week, a great discovery of niobium in Western Australia, and the others are there. Now, so where is the capital raisings heading into this year? If we look at Section H of our report, which are the capital raisings, we look at it month by month over the number of entries in that sections of our report on capital raisings. They were declining in the same way as the total being raised, but in this year we've seen a rise in the number of announcements, but they're generally for smaller amounts. So a lot of companies have been able to go to the market, pick up 1, 2, 3 million, but the bigger raisings have been harder to make. And so if you don't have the money, you can't do the exploration. Without exploration, there are no resource projects, or there's no resource discoveries, probably better put. If we look at the amount of money spent on exploration by those 780 odd companies that do report each quarter, we see that it hit a peak of just over $1 billion in the second quarter of 2022, and since then it has sort of come down a little bit. We've put that blue line there to show you the first quarter exploration, because the last entry is first quarter 24, and there's always less spent in the first quarter because that's the field off season for a lot of companies, particularly those working in the northern parts of Australia. But that is starting to come off as well. So less money is being spent on exploration, but it's still pretty healthy, $747 million. It's still about $1 million average per company. Where was the exploration spent? In the highest expenditure in first quarter 23 and also in second quarter. So there's a typo there, was for gold. And in quarter 3 and 4 and also in the first quarter 24 was lithium, despite the lithium falling over that period of time. Uranium exploration expenditure has not increased, even though it was the commodity that raised the most money, and funds raised went mainly in, the reason for that is that funds raised went mostly into emerging projects that were either coming on stream or more commonly restarting uranium projects that had failed over the last 10 years. The largest exploration spend in the first quarter 24 went to Strike Energy, a Western Australian gas startup in the North Perth Basin. Gallen Lithium in Argentina spent a whopping $24 million. Not exactly quite sure whether it did them a lot of good, but De Grey Mining, a fantastic emerging gold project in the Pilbara, spent $20 million. Genesis pulling together all the gold around Leonora, and $19 million. Melbana, who are onto some good oil discoveries in Cuba, spent $17 million, and Azure, which has been taken over since this list was put together, $15 million. Latin with a lithium project in Brazil, $12 million. And so you can see there are some big spenders out there. We reckon at AUSTEX that a company should be looking at spending at least $1 million in a quarter. But there's challenges to that. And the challenges to that's making it harder is the rise in, with that exploration money that is raised, is in the cost of staff and administration. These are going up and up and all the time, particularly administration with increasingly levels of sort of permitting stuff and stuff from governments and things. We're here in Sydney recently that it's a 14-page you have to fill out in New South Wales if you want to drill a hole now. It's just too much paperwork, it's too much administration, and it means less money in the ground. So whether we can do something about that, I don't know. But without drilling, there's no discoveries. And if we look there at our section E, F and G entries, so E is the drilling with drilling with intersections. F is drilling that's in progress or planned, and G is where they're talking about geology, geophysics, project reviews, and spin. And so what we've seen is a lot more of the spin coming out in 2024 on that red line, and the drill intersections and the drilling activity dropping. So people are trying very hard, companies are trying very, very hard to get your attention by coming up with announcements on rock chips. Don't go buy a stock on rock chips, please. Drilling results announcement in AUSTEC's reports, we were averaging about 500, that wouldn't be right, 500 a year. This is between January and May. Yeah, so between January and May for the last 7 years, about 500 a year, jumped up to about 800 per month in 2022, and now it's stopped down below to 500 again. So we are seeing less drilling announcements. So as I say, less drilling means less discoveries. So when you're looking at companies to invest in, check what drilling they're doing, make sure they are drilling and that they are moving ahead. Cash is king, of course. Where's the cash? It's sitting in graphite companies because they can't spend it. But heavy mineral sands have got a lot of cash because they've quite a number of those have decided to become rare earth companies because they have monazite, which used to be thrown away by the heavy mineral sands people in their mix. Lithium companies still have a lot of money as well. So check out the amount of cash that companies do hold. That's very important. Companies with the most cash is at the end of March were Liontown, who are trying to get that underground lithium mine going in Western Australia. West African Resources, fantastic gold company in Burkina Faso. De Grey, Carnarvon, Genesis and Capricorn Metals, all companies with over $150 million held. If you're looking at the gold performance, make sure you check out their all-in sustainable costs. We have a large number of gold producers on the ASX, and the average is about, if you're looking at the top 10, you're looking at under $2,000 Australian an ounce. You should be looking at their EMR over in Cambodia, RMS in WA, EVN all over the place. Good companies that you could be looking at that operate at low AISC. Be wary of those that are above $2,500. Perhaps one of the exceptions there is P&R, who are expanding their operations in Norseman, but particularly getting down to St Barbara and B&C down at the bottom there, which is just emerging. To wrap up, the ASX resource sector. Okay, what you're looking at is projects with outstanding results during the drilling stages in established geological terrains, and we're in business to tell you what they are. Top half by market cap offers the best opportunity. So you're looking at companies generally above $20 million. Established commodities where there is a large and open international market. Also important are companies with cash. Look at over $3 million in a history of capital raising at attractive rates to shareholders. Exploration focused, planning to spend $1 million a quarter in attractive geological terrains and low political risk countries. Below average admin to exploration ratio, so you're looking at the admin not exceeding 20% of the amount spent on exploration. What to ignore? Hot tips, hot copper, and always do your own due diligence. And there's just a list of the worst performed commodities last week in gold, lithium, zinc and nickel, which were the minerals that went down in price last week. And if you look at that list, there's some great opportunities there. They come up every week, and I'd like to thank you for the opportunity. Whilst we've listed the factors to take into consideration, resources are an ever-moving, complex market where there's no single answer. That's why we suggest wake up to AUSTEC every trading morning to help you with your guidance there. And we have the Austex Lite, which is very low cost for smaller investors. It comes out every Monday morning. So if you'd like to know more about our service, trial subscription, please let me know. Thanks for the opportunity to say a few words. Thank you.
Good on you, Rob Murdoch. And you cannot pay for that advice. Oh, look at you. So our first opportunity for you is leaping up onto the stage, armed with all that information now in your arsenal. And go back and you can watch that on the YouTube later on today and make some more notes. So this is our first investment opportunity. Not this gentleman himself, he's happily taken and in a nice relationship, I'm sure. But there you go. So please welcome CEO Duncan Cresnell. So we are talking about the endeavours of Copper Gold Explorer Copper Search as it strategises to exploit the rich resources of South Australia's Gawler Craton. Are you excited by that?
Absolutely excited about that, especially at the moment with drill rigs on site.
Yeah.
So, yeah, absolutely.
You've got a little bit of money in the bank as well, haven't you?
Yeah, a bit over 4 million in the bank. So I've just made a few notes after Rob's talk of I'm going to answer a few of his questions and sort of certainly use that to sort of set where Copper Search is.
Okay, Duncan. Well, I will get everyone to applaud on cue, and let's welcome our first presenter today.
No, look, Duncan Chessell, the CEO of Copper Search. Our ASX stock code is CUS. And what I'd like to, probably a couple of the key things to take away from today's presentation is, what's actually happening on the ground for us right now and whether you want to kind of get involved in that. It is very exciting at the moment. We've got a drilling rig on site up in the Gawler Craton. Our ground is up in the top corner of the map there, those orange squares, just north of Prominent Hill, Carrapateena and Olympic Dam. And we've got two prospects we're going to be drill testing over the next month. One of them we've already started drilling on, and they're Carrapateena and Prominent Hill scale. So in terms of Rob Murdoch's kind of part of where do we sit on the Lassonde curve, we certainly sit in the excitement phase. We are here at an investment conference. I would say that we probably, to put it in a Rob Murdoch language again, we're in that very speculative phase. So the drilling that we're undertaking is probably going to change the company from either being around a $10 million market cap to being something a lot higher than that, or we'll come back down a little bit if we're not successful on this. So I'll talk to you a little bit about the projects going on, but it was very interesting sort of listening to Rob's chat about, do your own research and that quality projects, how do you pick a quality project? It's not just the market cap, I think there's a lot of it around the quality of the management team and the types of projects that the company's willing to take on and what are we willing to spend shareholders' money on and how do we make those decisions? And I think I'll talk to that a little bit through the presentation as well. And I think that's a key difference for us is some of the people involved in the company. The other one we don't have any rare earths at all, but Rob's version of rare earths that it's all going to end up being processed in China. I'm not quite sure about that. I think Rob Rutherford and Janita might sort of point to where they think there's going to be some other processing opportunities for those products to go to. So it'd be interesting to hear about that. The other thing was just very out of interested, how many people here sort of only invest in the excitement phase versus the developed mines or the production facilities? So how many people here actually own stock in producing mines at the moment? I've got a few. And how many people keep up your hands if you actually own some stuff in the exploration phase, in the excitement phase? So, good. So we've got quite a few people in the room in that space. Well, this, I guess, is the one that you probably want to have a look at, in my opinion, at the moment. Talking a little bit about the people involved, I think, is one of the key points of difference for this company. So probably on that previous map there, I should point out Tony Belperio, who's ex-head of the Joel Survey for SA. He discovered Prominent Hill, so one of those 3 mines now that BHP operate. He also discovered the Jericho IOCG in the Cloncurry district as well. So nice to have someone on your technical advisory panel who's already discovered 2 of the types of deposits that we're looking for. How many people here are familiar with what an IOCG is? Does anybody know what it stands for? Quite a few people don't. So it's an iron oxide copper gold type of system. They tend to form in very large sort of pipe-like or breccia sort of structures or features, and they're typically, can host, through 1 million tonnes of contained copper through to Oak Dam is looking like it's going to be 10 million tonnes, and then you've got the super giants of Olympic Dam. A lot of them seem to hover in that sort of, up to about 10 million tonnes of contained copper, and that's the kind of size of the prize that we're looking for. Any of those mines, once all the processing, all the feasibility work would be done, would be sold for into the billions of dollars. So that's really what Copper Search is about, is going out and seeking out the next, giant copper deposit in Australia. So quite exciting. The other people on our advisory panel, John Main is exploration manager of Rio Tinto Americas for 20 years, and he's discovered 4 world-class deposits in his 40-year career. So what I'm talking about with the technical advisory panel is a lot of companies don't have this process in place where the exploration team, which I run, we come up with the ideas, we do a lot of the work, we do all the geophysics and the drilling and the programming, and we come up with the ideas, and we sort of collaborate and workshop with the guys who have been in the industry for 30, 40 years and can see, whether or not they could sort of say, okay, yeah, this looks feasible to us. So, but the thresholds that those guys apply to us is pretty high because the expectations is we're looking for giant deposits. So we're not after the sort of a small win. The other side of the board, Peter McIntyre has been involved and has been the managing director of a gold explorer, which turned into a mining company. And so he's taken a project all the way through, has also been involved in the discovery of the Husab uranium deposit in Africa, which they sold for $2.5 billion. So on the board side, there's been over $4 billion worth of shareholder value created. There's multiple large-scale deposits has been discovered, and our technical advisory panel has been involved in. So in terms of how do you pick a company, I think you look at the people involved and why are these sorts of people involved in looking in South Australia for an IOCG in this region, and I'll sort of talk to that. So I think Copper Search is a pretty good bet. Technical, good teams find good projects, and hopefully sometimes after many years they find they'll find a decent-sized deposit. A little bit about the company structure, cap structure at the moment. Share price trading sort of somewhere between 8 and 10 cents. We've got over $4 million cash in the bank. Current drill program will cost us less than $1 million. So in terms of, I think if you're looking at Copper Search as what's the upside, it's, I think, very large, market cap of 10 mil. The downside risk is this program's not successful. We'll have over $3 million cash at bank. Share price might come off a bit, but we've got a good team. We've still got some more targets. We've got some more stuff to go on our projects. So I think it's in a pretty good spot to become a new shareholder. Where it sits, the Peak project, we've got 5,000 square kilometres of ground in the Peak and Denison domain. It's about 80 kilometres north or to the northeast of Prominent Hill, against Lake Eyre. What changed? What's a little bit different about this project? And it's a concept that this area is like Cloncurry, the IOCGs from the Cloncurry area. Now, what I'll do is I'll take you back 1.7 billion years, quite quickly, and we'll have a look at you can see on the left-hand side, you've got the map of Australia with what it looked like 1.8 billion years ago, with the big sort of swathe of grey being the Mount Isa sort of supergroup there, and or the Mount Isa successions, and then you've got the Curnamona and the Gawler Craton, and the red dot's the Peak and Denison geological domain, and then over 1.7 billion years, that's rotated around, and you've ended up with the Gawler Craton sitting where we are. But the difference is this, that where we are, the rocks are about 80 million years younger than the rest of the Gawler Craton, so everyone overlooked it. But it's the same age as all the IOCGs in Mount Isa, and that's the theory of why Copper Search went there 5 years ago, picked up a really good piece of ground, and over time we eventually listed the company a couple of years ago, raising $12 million. and have been going through a big geophysical program, spending $2 million on geophysics. So a lot of testing, sort of ready, aiming before we fire and drill holes. We drilled quite a few holes last year. We've then put all that back into our modelling and come up with these targets this year. So that's a little bit of the origin of, it's a bit of a proof of concept. Identifying a new exploration space is quite an interesting sort of approach as an explorer. It's big risk, but big upside potential. We went through a very rigorous targeting criteria. Again, all of our targets, we did a big survey against, or desktop review of all the IOCGs in Australia and measured up our targets against them and came up with a target ranking that said we have to be going after something that's a prominent hill scale before we're going to bother to try and drill it. Otherwise, it's not worth drilling in a remote area. Getting into the actual targets themselves, on the screen at the moment, you can see on the bottom left-hand side, there's a sort of a little bit of an extra rainbow-coloured rectangle put over the top of the yellow image at the back, which is the magnetics. There's a big shear zone that comes right across the Gawler Craton called the Karari Shear Zone. And that's a very deep tapping structure which can allow IOCG or mineralising fluids to get closer to the surface. And where you get an offset or a jog in that structure, that's a great place to emplace mineralised fluids and potentially an IOCG deposit. So what we've got here is we've got a chargeability anomaly on the left-hand side, which we've got a rig on at the moment. We're at 250 metres. Target depth is 500. We've got a chargeability anomaly at 500 to 700 metres, and we're at 250 at the moment. So kind of watching the phone a little bit at the moment. So it's quite exciting. That's the Paradise Dam prospect. The scale of this thing is sort of probably about 2 or 3 kilometres in strike length. Again, that's potentially a fairly large deposit if it ends up proving to be that. A chargeability anomaly is potentially disseminated sulfides. It could also be graphite. It could be a pyritic shale. There's a couple of things it could be. One of them is copper sulfides or base metal sulfides. So worth drilling the hole. The hole immediately to the north, we drilled into a quartzite, so it wasn't a pyritic shale. We've hit copper in holes in that area. We've had the rare earths tell us we're in a near miss situation. So we're kind of, zeroing in our drill targeting in onto what we think is potentially a very large mineral system, or not. So again, word of warning, it's kind of a very binary outcome from these sorts of situations. But again, very exciting part of the Lassonde curve, or as Rob calls it, the excitement part of the wiggly line. So interesting version of the Lassonde curve. So the other one is the Douglas Creek prospect, immediately to the north of that target, the Paradise Dam one. That's a gravity and mag coincident target of a scale, again, sort of prominent hill potential scale in terms of the magnetic signature, again, looks to us to being potential for that. Tony was pretty happy to see that we'll be going and drilling this straight after the Paradise Dam prospect. Depth to basement, only about 120 metres, so pretty shallow sort of target. But where we're thinking the magnetic signature and the gravity starts to really improve is at around the 300 to 400 metres mark. So we'll be drilling down to around 500 to test that. And again, size of the prize, this is what the other things sort of look like. I won't go into this one too much, but BHP are drilling out their Oak Dam West prospect, and you can see in the diagram on the left-hand side, sort of that breccia pipe shape, and then they've got a sand unit over the top of it, which is very similar to what we have. Ours is 120 metres, not 650. So just to sort of summarise what CopperSearch is about and what we're doing at the moment, we're out in the paddock drilling 2 potential large-scale copper deposits. We're at about 250 metres on a 500 metre depth to target on Paradise Dam, and we should be finished that work in the next month. Probably take about a month to get a lab assays after that, and we're also undertaking some regional exploration for gold in the north of our project at the moment. Over $4 million cash in the bank with a successful capital raise just recently. So, and plan is lab assays will be released appropriately at the end of each hole or after each hole's been drilled. So thanks very much, and great to be here again with another one of Jackson and the Vertical Events teams. Thank you.
Brilliant presentation, Duncan, and nice start to the day. Thank you so much for that. I was wondering if you're going to manage to pack all that into your 15 minutes, but you did. Thank you. The next one's going to be an interesting one to pack into as well. Alan, come on up here and join us. These guys are really, really, really busy. They're busy exploring. So yes, a jam-packed presentation. This is Miramar Resources, you'll see on your program there. So they've got a potential new gold cap, they've got a new ore province, they've got another site that has multi-commodity potential, and they're led by a pretty impressive team with a great track record, including this fella. I've introduced him briefly, Mr. Alan Kelly. How are you today, sir?
Thank you. Good.
Yeah. Big night last night?
Bit croaky, but hopefully I'll get through okay.
Indeed. So Alan's role with Miramar is their executive chairman, and he's a fellow with a really good proven track record, so listen to him intently. Please make him welcome.
Thanks, Chrissy. Thanks, Chrissy, and thanks to everyone coming along, and thanks to Vertical Events putting this conference on again this year. I think the headline there says it all. We're a gold critical minerals explorer in WA. We've got a lot of projects, and I'm going to touch briefly on a couple of them, but I'd ask you to have a look at our presentations, go to our website, and please come by the booth and have a chat with us as well. You've seen this curve already. Mine's a sort of simplified version of what Rob put up. I think as an exploration company, obviously the best way to create value for shareholders is by making a discovery. And I'm very fortunate to have done that before. Back in 2010, listed a company called Dore Minerals. We made a gold discovery, went from 20 cents to $1.70 very quickly, and then actually took that into production as well. So have experience in getting from here to here, that excitement phase that Rob was talking about. So that's our aim and the strategy of how we're going to achieve that. We're exploring for in-demand commodities, and I'll talk about that in a bit more detail in a minute. We've got underexplored projects and world-class gold mineral provinces, and that's one of the things that Duncan was saying as well. You've got to be in the right place. We use systematic exploration. We don't sort of jump all over the place. We've got a clear plan to sort of progress our projects forward. Sometimes that takes a bit of time and also takes a bit of money. We try to maximise our exploration spend. I think we're running at about 75% of our dollars going in the ground since we listed. And we've been able to stretch our money by getting EIS funding from the state government in WA, and also R&D refunds for some of the sort of unique techniques that we've been applying as well. And the projects that we've selected, we're trying to leverage off existing mining and processing infrastructure. So, not having to make that decision about building something yourself if there's something already there. So our key three projects that I'm going to talk about today, they're actually, quite different, each of them. We've got a great project 15 kilometres north of Kalgoorlie, a typical Eastern Goldfields gold project. We've got a really unique, novel nickel-copper story in the Bangamore, which is in the sort of Gascoyne region of WA, where we're looking for an entirely new nickel deposit style. So it's a bit like Sirius going out and finding Nova back in 2012. And then up near Onslow, our whale shark project, it's actually quite similar to some of the stuff that Duncan was talking about. Looking for IOCG mineralisation there, but also yesterday we put out a very large billion-tonne magnetite exploration target. So that's pretty interesting as well. So here's our land holding in the Eastern Goldfields. It's a large land position. I'm really only going to talk about Gidgee today, but this Randalls project is a fairly sort of new pickup. That's a very large project there with lots of potential, and we'll be progressing those tenements to grant over the next few months or so. So our Gidgee project is our flagship. For those that like to invest in real estate, it's the cheapest house in the best street. We've got Kalgoorlie Super Pit here, Kanowna Belle up here, Paddington up here, and Evolution's Mungari deposit sort of sits over here. So I don't think we could get any closer to Kalgoorlie if we tried without being part of Northern Star. So Northern Star's got all that ground and comes right up to our tenement boundary. What we really like about it is that there's this big structure called the Barara Shear Zone which runs through our project, and it's very underexplored, and the reason is that there's a paleo channel, an ancient riverbed that runs across the project, and that basically obscured all the interesting geology. So even though it's between two major deposits, it basically had no exploration done on it when we picked the project up in 2020. So this is a real simple geology model. I won't dwell on this too much, but basically we've got a pretty clear model of what we're looking for at Gidgee, and so this is sort of what drives our targeting. So since we've been there, we've done a number of air core holes. I think it's about 1,000 air core holes now, and pretty limited amount of RC drilling. This image shows you the paleo channel. So the blue colour is sort of the deepest bit of the channel, the riverbed basically running through over the project, and the red bits are the shallower parts of the channel. So underneath that channel, we've discovered 4 new gold zones, sort of about 1 kilometre long, where we've got air core hits up to sort of 5 grams, 7 grams, 13 grams. And now the challenge is to do the deeper drilling underneath that to find out where that gold in the air core drilling is coming from. We've got a really nice target down here, which I'll talk about on the next slide, at 8 Mile. This is right on our southern tenement boundary. So Northern Star have got this deposit called 8 Mile, which is about 300,000 ounces that comes right up to our tenement boundary. That's a cross-section of what it looks like, sort of about 20 metres south of the boundary. Unfortunately, Northern Star don't put out exploration results, so we've had to sort of stand on the tenement boundary and look at what they're doing to try and work out what's going on. But we did some drilling a couple of years ago just across the border, and we missed it. We couldn't work out why, what was going on. We did what's called an IP survey. It's a geophysical technique, and we ran some lines across, and lo and behold, it looks like the deposit might have been shunted over 400 metres by a fault. So we're currently doing another IP survey up here, and once we've got the results from both of those surveys, we'll put that together and we'll put a couple of drill holes in here and see if we can find an extension to that deposit just on the other side of the boundary. So that could be pretty interesting, and hopefully that'll happen in the next couple of months. This is the main sort of discovery that we made, Marylebone. This is all the air core drilling. It's one of those targets that's underneath the paleo channel. We put together an exploration target, I think it was early last year, because we didn't think people really understood how much gold we found here. So there's about 100,000 ounces of gold in that sort of pink polygon area that we've discovered. That's great, but we're really looking for something that's more like 500,000 ounces to 1 million ounces. The challenge now is to get underneath this and work out where that shallow, what we call supergene golds come from. Blackfriars, this is the next target over. This looks the closest thing to Paddington, which is a deposit up the road. We had an air core hole that ended in 11 grams here, which was pretty exciting. We drilled an RC hole. Unfortunately, that RC hole failed because of that paleo channel, which has a lot of running sands in it. But before the hole failed, we got a really nice looking dolerite with heaps of sulphides and that. So we want to go back there and test that, probably with a diamond rig, and work out what's going on there. I'm going to move over to the Bangamore now. This is quite different to the project I was just talking about. So what we're looking for is a large nickel copper PG deposit, something similar to Nova, to Nebo Babel in the West Musgraves, or some of the stuff up in the Kimberley. It's Proterozoic, so these deposits are similar to things like the giant Voisey Bay deposit, or Thompson and Raglan in Canada. Or it's closer to what the deposit's known as Norilsk in Russia, which is the largest nickel deposit in the world. It's actually one of the largest metal deposits in the world as well. So our Bangamore projects sit in this Capricorn origin, which is an extension of the West Musgraves where BHP's Nebo Babel deposit is. Why are we looking for nickel? Well, not all nickel deposits are created equal. This is a cost curve. All the grey ones here are all laterite deposits. The red ones and the yellow ones are sulphide deposits, so things like Kambalda and Mount Keith and things like that. But these, what we call mafic intrusion-hosted nickel deposits, are huge. They're huge, they're high grade, and they're low cost. And they're all down at this end of the cost curve. And if you look at this, these actually have negative costs. So they get byproduct credits from the things like the cobalt and the PGEs and stuff. So we were looking for something down here. West Musgrave sits about there. Nova sits in here somewhere. Norilsk, Voisey Bay, they all sit in here. So this is what we're looking for. So we identified this, what we call the Banggamore province. It sits between the Pilbara up here and the Yilgarn down here, and it's this belt that's filled in with a basin. And within that basin, there's a whole heap of these, what we call dolerite sills, and they're the same age as Nebo and Babel. This area's been recognised by GSWA, Geoscience Australia and CSIRO as having potential for this Norilsk-style mineralisation. And so we've put together a large land holding. We've got about 2,000 square kilometres. Some of it's applications and some of it's granted. And at the moment, our focus is on this Mount Vernon Trouble Bore area here. It's got a lot of the key ingredients that you need. It's got the dolerite sills. It's got some major faults, which are like your sort of plumbing system. It's got sulphide-rich sediments, which is sulphur that mixes with the nickel and creates your nickel sulphide. And there's some big regional EM and geochem anomalies. So this is the basic little model. This is like a cross-section showing sort of a Norilsk deposit. You have these dolerite dikes that come up and then they become sills. Where they intrude into sulphidic sediments, the sulphur sort of drops out and makes nickel sulphides. This is the equivalent in the Banggamore. So you've got the Edmund Basin, you've got some sedimentary units here which have got lots of sulphide and sulphate. And up here you've got some pyritic siltstones, and the dolerite sills intrude into them and hopefully the nickel sulphides drop out. So that's the model that we're chasing. To date, we've sort of progressed this. It's taken about 4 years to get to where we are now. We're now at the point where we've got drill targets identified at Mount Vernon and Trouble Bore. We've got EIS funding from the West Australian Government, and we've got our program of work approval. So we should be drilling here in the September quarter. This is basically a whole brand new idea. If we make a discovery at Mount Vernon or Trouble Bore, we've basically identified a whole new nickel copper province. So that's our Mount Vernon project, so I won't dwell on that too much, but basically we've got a number of EM targets that we're going to test across those two areas, and hopefully it's going to be a pretty exciting drilling program. So lastly, I'm going to talk about whale shark. We put out some news yesterday about that. This is our project up at Onslow. It's a multi-commodity project in a very infrastructure-rich area. So here's Onslow, here's the Norwest Coastal Highway, here's our whale shark project here. And basically what you've got is you've got Proterozoic rocks over here that go under a basin. They go under the Northern Carnarvon Basin. Now, unlike South Australia, where Duncan's exploring, the cover depth here is only about 100 metres, and some of it's sort of less than 50 metres. So, you know, there's copper, gold and magnetite iron potential here under shallow cover, but there's also heaps of infrastructure. You've got a main highway, you've got the gas pipeline, you've got a port at Onslow, you've got Sino-Steel's magnetite project, Marty are building a green energy project there with their salt and potash, so we're in a fantastic location. This is a magnetic image of whale shark. Those sort of white areas, that's a banded iron formation that sits around a granodiorite. It's got potential for gold. There was gold intersected in this banded iron formation here by Western Mining back in the 90s. We've discovered ISCG pathfinders in soils and also shallow air core drilling in the area through here over the last 2 years. And yesterday we put out a exploration target for potentially about 1 billion tonnes of magnetite sitting in two banded iron formations that sit here. One of the things we've just done is what's called a passive seismic survey, and we did that so we could basically map the basement depth here. So you can see the hot colours there where the basement's only sort of 20 or 30 metres deep, and the deepest parts of this are only about 130 to 140 metres. So very easy to drill test with things like air core drilling. As I said, we put out this magnetite exploration target yesterday morning. These mag anomalies here are banded iron formations. We think that if you take the midpoint of that exploration target, that's about 1 billion tonnes of magnetite that could be mined and processed and shipped out of this area. So we're going to do a bit of work on this and work out what might actually be there. So in summary, I talked about 3 projects, but we've got a number of others, and I've sort of, ranked them from, early stage where we've got exploration applications through to, bedrock interceptions. So I talked about 8 Mile, Marylebone, Whale Shark. There's some pretty exciting targets there. We want to move at least a couple of these into the resource delineation phase over the next sort of, 6 to 12 months. In terms of the board, as Chrissy said, I've been around a little while. I ran a company called Dore Minerals and took that from exploration to discovery and into production. Marianne Bush, the geologist, she's our technical director. We've got a very low market cap. I think our market cap today is about $2 million. So lots and lots of upside for shareholders. I'm a big shareholder in the company. I've put money in every raising since we listed, and I'll be doing some more shortly. Just on that, we've got a rights issue that will be opening next week for shareholders, so we'd like to get some more money in the tin so we can drill some of these projects that are pretty exciting. In summary, objectives for this year: drilling programs at Gidgee, Bangamore and Whale Shark, and progressing some of our other tenements to grant. And a real summary, why invest in Miramar. We've got a great project at Gidgee with potential for a new gold camp right next to Kalgoorlie. We're exploring a whole new nickel province up at the Bangamore, and we've got multi-commodity potential at Whale Shark. The board's got a track record, we've got a very tight register and a very low EV, so there's heaps of upside. Thanks very much.
That's better. Now I can say things about you and people can actually hear me. That makes it worthwhile. So you're very lucky. I was going to have to come and strangle you with Ian Hodges' scarf. I went looking for my jacket and I couldn't find it, but I've got the maroons to keep me warm. There we go. That'll probably make me a target there somewhere. Ben Valeri, how are you going today, sir?
Good, Chrissy, how are you?
You're a busy man, so we're going to change our discussion completely now. We're going towards uranium. So not only you're not just satisfied with your nice little project in South Australia, you've gone international as well, and lots of upside on this one, yeah?
That's right.
All right. So, team, this is Ben Vallerine. He's a Managing Director of Cobber Resources. Lots of really positive news flow from these guys recently. Please make him very welcome.
Thank you, Chrissy. Yeah, we'll change tact a little bit and we'll go to uranium. It's kind of topical at the moment with the news yesterday with Peter Dutton announcing a potential nuclear program. So, we need the uranium to defeat that. And we've moved to uranium this year. So we've acquired 2 high-quality uranium projects in 2 high-quality districts. Just a quick summary on those projects. Our flagship project is the Uramba uranium project. It's located in South Australia. So it's one of the main primary producing uranium areas in Australia. Our 3 operating mines, uranium mines, all occur in South Australia. It's a paleo channel hosted system. We acquired that in January this year, and that's been our focus. And we're preparing to drill now. The rigs are mobilising as we speak, and we should be drilling by the end of next week. We've also, in April, acquired a high-grade hard rock uranium deposit in Canada called the Harrier Uranium Project. We were able to just do a gentle deal with a prospector, acquire 130 square kilometres of highly prospective land there, and then following that in May, we were able to stake the strike extensions in our own name, and that project's now 480 square kilometres, and that's located in a province called Labrador, or Newfoundland and Labrador, and Paladin Energy, they've got the £127 million Michelin uranium deposit just nearby. So here's a bit of a screenshot. So we've got $5 million in the bank at the moment, $5.5 million. So we're well funded to fund our exploration drill programs. We've got activity going on at the moment in Harrier. So market cap of about $23 million, $5 million in the bank. We're well positioned, and we're part of that excitement phase at the moment as well that has been talked about a bit this morning. We're going to be active drilling in Uramba and exploring at Harrier over the coming months. So I want to talk about our flagship Uramba project first. It's located in South Australia. It's in the district with 2 producing ISR mines. So firstly, there's the Heathgate Resources. They own the Beverley operation, and that's been continuously producing uranium for 20 years now. It's produced about 40 million pounds over that 20-year period. And they have resources of around about 165 million pounds at 2,500 ppm. So it's a fantastic deposit owned by a private company, so you don't hear much news about it. But over the time, they've initially started operating at the Beverley mine, and during that time, they've actually been able to discover 4 Mile and 4 Mile East, and they've been able to expand their operation by continued exploration success. In addition to that, there's Boss Energy. Boss Energy have recently started mining at the Honeymoon operation, where they've started producing yellowcake. They have about 71 million pounds in total resources, including Honeymoon, which is 36 million pounds at 660 ppm. So we're located immediately to the north. So Cobar has 5,000 square kilometres immediately north of Boss. We hold the strike extensions to the mineralisation, and the paleo channels, the ancient river systems that host these uranium deposits, host 50 million pounds to the south of us at Honeymoon's Boss operation and the Jason deposit, and that paleo channel then strikes onto Cobar's property, where we have 5,000 square kilometres and 250 kilometres of paleo channels to explore. We have a couple of projects that we're looking to start on, the first one being Oban. Oban's an historic mineral resource. It's actually JORC 2004 compliant. It's about 4.6 million pounds at 260 ppm, and we think that's a great start. I see this as an exploration play. 5,000 square kilometres is a bit of an exploration geologist's dream. Well, it's highly prospective, 250 kilometres of paleo channels, but we've got a proof of concept in Oban. 4.6 million pounds is a great start, and we're looking to build upon that. We also have other projects, prospects, Mount John, which is immediately north of Boss Energy's Jason deposit. Jason hosts 10 million pounds, and we're just 4 kilometres to the north of that. So our initial focus, the drill rigs are preparing to mobilise as we speak. We're going to be drilling at our Oban deposit. That's where I said that we've got 4.6 million pounds, 260 ppm. But as we do more and more interpretation on Oban, we're working out that there's a lot of thick and high grade, and that's what we're looking to focus on. We're looking to turn Oban into a much higher grade and a larger deposit. My exploration manager, Mark Cousins, previously worked with a company called Cauldron Energy, and when his time there, he was able to take their project in Western Australia from about 4 million pounds to 30 million pounds. So he's working on this now, and he's looking to repeat that. So we're starting with 4 million pounds, and over the next year or two, we're looking to increase that as much as we can. And 30 million pounds is what we're aiming to achieve here at Oban. And we're doing that by detailed geological reviews and reinterpretation of the data and chasing some of these high-grade trends. So one thing that Mark's worked on and realised when doing these interpretations is he believes that these channels actually trend a bit more northeast than was previously thought. And so the high-grade uranium tends to hang within 50 minutes of these internal channels within the greater Paleo Valley. And he's interpreted them to be striking northeast. And it's a kind of a new concept for the area, and what it's done is it's actually opened up a lot of targets. So with this new interpretation, there's a lot of areas that haven't been drilled, and Mark's very confident these high-grade trends are in this northeast direction, and they're all open, particularly to the northeast, but also a little bit to the southwest as well. So our upcoming drill program is going to be focusing on these targets, and also expanding with the resource within the actual Oban deposit itself. So we're really, really looking to grow the high-grade component of the Oban deposit. So this section shows that there is a lot of high grade, and it's quite continuous as well. So the resource head grade's 260 ppm, but when you look at this section, there's multiple intersections. 2.2 metres at 2,000 ppm, 1.5 metres at 1,700 ppm. There's some really, really fantastic grades, and we believe we can expand on that and make an economic deposit here at Oban, and that's what we'll be looking to do with our upcoming drill program. This will be our first drill program, and with a bit of success, there'll be more and more as we go. And as I said, with $5 million in the bank, we're well funded to move this up that exploration curve and advance this project. So Mount John, it's one of my favourite prospects. It's hasn't got a resource and hasn't been drilled out yet. It's more of an exploration project. I'm an exploration geologist myself. Spent 20 years managing exploration programs, and 10 years of that's been in uranium. So I've got a lot of uranium experience, and this is one of the projects I really like. And it's partly a little bit of neurology. Jason deposit, owned by Boss Energy. It's going to be a satellite operation to their Honeymoon operation, and it's at 10.7 million pounds at 790 ppm. So it's one of Boss's highest grade resources, and it sits in the Paleo Channel, the extension of the Uramba Paleo Channel. So it's got 50 million pounds to the south of us, and then just 4 kilometres in, as you can see on this map, the Jason, wrong button. The Jason deposit sits down here, at 10 million pounds, just 4 kilometres, and you're into our property. And this is a large-scale map. So this map is 20 kilometres wide. There's been some drilling by the previous operator back in 2007 to 2009. But some of these drill holes, you can see it here, these drill holes here, they're 800 metres apart. So this is a large prospect that hasn't been well drilled, and I think it's a really, really exciting prospect. It's got some blue sky potential, and we've got an opportunity to make a discovery here. Meanwhile, we're only 17 kilometres north of Boss's producing Honeymoon operation. So we've got a fantastic opportunity if we can find a smaller deposit. There's opportunities to toll treat it at Honeymoon or have a relationship with Honeymoon. But if we can go out and find 20, 30, 40 million pounds, we also have the opportunity to go standalone. And I think this is a fantastic place to explore and start, and it's got some great neurology, and it's also got some interesting uranium intersections. We're starting to get 3 metres at 230 ppm, 150 ppm, all proof of concept. There's definitely mineralisation in this system, and we're going to explore that and chase that further. So, and outside those two main prospects that we're going to be drilling in the coming months, there's just 5,000 square kilometres to explore, 250 kilometres of paleo channels. And within that, there is numerous targets. So we've got this massive pipeline of projects that we're going to start with Oban, move to Mount John, and then we're going to start at, we've got Berber, metre at 1200 ppm there, and then we've got Yalkapoo to the north. It hasn't been drilled since the 1970s. We've got Yaramba North, it's got 2 metres at 500 ppm. There's just a plethora of projects to chase up here, and as an exploration geologist, it's a dream, and we're going to start exploring these over the next 6 months. As we finish up at Oban and Mount John, we'll start moving more to these exploration targets where there's real blue sky potential, and with 5,000 square kilometres immediately north of 70 million pounds, there's bound to be some extra resources within here. And this is an example of what we're doing from an exploration point of view. We've recently engaged a geophysical consultant to try and identify additional paleo channels. This hasn't been aggressively explored in 10 years, and so we think there's opportunity to discover paleo channels that are previously not known. And this is one example based on gravity. And you'll see here that this is immediately to the east of Mount John. You'll see this area here is interpreted as a paleo channel in the gravity, and it goes for 25 kilometres, and it's never ever been drilled. So Mark Cousins has done a lot of good quality work here, and he's identified what looks like a paleo channel in all the geophysics we've done, and it's never been drilled. So we've recently acquired heritage approvals and all the approvals to go out and drill this, and if we put some lines into this and find a paleo channel, then we're off to the races with another 25 kilometres of paleo channels to explore, just 4 to 20 kilometres north of Jason deposit again. So we're really excited about the potential to find early stage projects and really grow this from a blue sky potential as well as the existing resources and previously identified prospects. As I said, we're about to drill 10,000 metres out there, which should cost us about $1 million, which will leave us with $4 million in the bank. So we're well funded, and once we complete that program, we'll be looking at the results and looking to continue drilling out there. We've got $5 million to hit this hard, and we're looking forward to drilling all 3 of these prospects this year. And once we complete that, as I said, we'll be moving the rig around the other prospects during the rest of the year. So let's move to Canada quickly. We only acquired this project in April. We acquired 130 square kilometres. It's in an Archean greenstone belt. It's potential for iron ore, copper, gold deposits, which we've been talking about this morning with the previous two guys. And they also hold high-grade uranium. And it's also got potential for the Athabasca-style uranium deposits. They produce 40% of the world's uranium from these Athabasca-style deposits, and they're very, very high grade. We actually have 9 prospects at our project that have assayed over 1% uranium. That's 10,000 ppm when you start talking in grades like the paleo channels. So they're very, very high grade. 1% uranium is equivalent in price to around about an ounce of gold. So these are really, really high grade. We've got a team on the ground at the moment. We've got 5 geologists walking over these prospects and assessing which ones are the best targets for drilling. Rob did say don't invest in companies because they've got rock chips, but you've got to start somewhere. Rock chips are the first step in the exploration cycle, and it's the ultimate level of that excitement. So by having these 2 projects, we de-risk it. We've got the drilling at Yaramba, and then we've got the rock chips here at Harrier, and they're very, very high grade, fantastic exposure, and the potential to find a large high-grade deposit. As I said, Paladin's Michelin deposit is only 50 kilometres, and that's 127 million pounds. So there's outstanding potential to find high-grade uranium deposits. This is a photo from this week. My crew's actually out there at the moment. They're walking around with scintillometers. So uranium's quite an interesting thing to explore, because basically they carry this machine around and it measures your radiation. And when you walk over an outcrop that's got uranium, it starts to buzz. So then you walk a bit closer and it starts to really buzz, and then you found your uranium. Then you take a sample and send that to the lab. But what you can actually do is follow that on the ground. So you know you've got your uranium because your scintillometer's buzzing. So these 5 guys walking around in the bush along all these outcrops with their scintillometers, finding plenty of uranium. Following up on these high-grade prospects, working out which ones are the thickest and which ones will be our best drill targets. And we'll work these projects up for drilling in the future. So this is a bit of a project timeline for us. I've pretty much touched on this. We'll be drilling in at Uramba within the week. We're currently on the ground at Harrier, so we're going to be having assay results coming through from Harrier in July. We'll be having drilling results coming through towards the end of July as well. So we're going to have a strong news flow from both those projects from 2 fronts as we progress forward. And yeah, it's exciting times for us, because once we get those results in, we can quickly turn them around and plan extra programs. We've got the drilling rig locked up for quite a while now, and we'll continue to drill there after this program as well. So we've got a very experienced team. Myself, 10 years in uranium. Mark Cousins is a uranium specialist geologist, and also Mike Haynes, the chairman, spent 10 years running a uranium company. So I'm a bit of a uranium bull. We picked this project up as the uranium approached $106 a pound. It was very coincidental timing. It's fallen back off to $84 a pound now, but it's still, it's a great price for uranium, and I'm very bullish on the supply and demand curve. There's still 440 reactors around the world, 60 in production, 110 planned. So the supply and demand fundamentals are still really, really strong for uranium. I'm at booth 6. Feel free to come along, ask any questions, talk a little bit about uranium, ask about my projects. Thanks, Chrissy.
Well done, Ben. Thank you. Timely presentation giving that announcement by the Coalition yesterday. I'm sure you've all been covering it. All right, our next company, Yandal Resources. It has a nice little cache of money in the bank that's enabling them to conduct a very aggressive exploration program. And leading that program and presenting the Yandal story today is this fellow, their technical director, but also, as of the 1st of July, their CEO. Congratulations to you, Christopher Alshot. Would you please make him welcome, everyone?
Good morning. It's a pleasure to be here in the Gold Coast. It's a bit cool, but I'm still enjoying the weather. It's a pleasure to be here presenting the Yandal story, and let's dive right in and start. So we're a gold exploration company. Our focus is adding shareholder value through discovery and resource growth, and we're focused on doing that in areas where there's a low threshold to development or clear monetisation pathways. To achieve that objective, we're focusing in Tier 1 gold belts, where we know there's some proven gold endowment, increasing probability of success by using good systematic scientific exploration methods, and mitigating development risk by focusing on projects that are proximal to existing infrastructure, such as haul roads and milling capacity. So sort of key highlights that I'd like to get across today are that we have 3 very strategically well-placed projects in Tier 1 gold belts of Western Australia. Current resource inventory of just under 500,000 ounces, and that's all on granted mining leases. We have an exploration target at our Ironstone Well Barwidgee project of 400,000 ounces to 1.8 million ounces, and that's largely what I'm going to be talking through today. Hopefully I can demonstrate that we have the potential for significant discoveries, that we're focused, technically driven, and well-funded. Quick overview of the capital structure and register. We've got quite a strong cash position, 7.2 at the end of the last quarter, probably sitting around 5.5 at the moment. We've had a very busy quarter. Market cap around sort of 30 million, share price bouncing between sort of 11 and sort of 14 cents over the last few weeks. Quite a good register there. We've got some very large supportive shareholders. The top 20 have 83%. They're really supportive, they're very long term, and they've given us a lot of support over the last sort of 6 months to address our targets and test them aggressively. quick sort of overview of the board there. I suppose only thing I would like to mention today is that Tim Kennedy is going to be stepping down as Managing Director effective 1st of July, and I'll be stepping up as MD. And that we've got Ed Eschers on the board as a technical advisor as well, providing good sort of strategic and technical feedback regarding some of our opportunities. Quick overview of all 3 projects. So we're in the eastern goldfields of Western Australia. They're all on Tier 1 greenstone belts. To the south, we have the Gordons Gold Project that sits just north of Kanowna Belle on the eastern limb of the Kanowna Scotia Dome. Kanowna Belle is operated by Northern Star, large deposit, plenty of infrastructure in that part of the world. 2 other projects are up in the Yandal Greenstone Belt, our namesake. Again, a very well-endowed greenstone belt. We've got Mount McClure, which just sits south of Northern Star's Aurelia operations, and then we've got our Ironstone Well Barwidgee project, which sits right between Jundee and Bronzewing, and is an excellent part of the sort of eastern goldfields. Across all projects, we've got just under 500,000 ounces, as I said, on granted mining leases. These are all proven Tier 1 gold belts with excellent endowment, and all 3 have the potential for material discoveries. So zooming into our Ironstone Well Barwidgee project, which is what I'm going to sort of focus on this morning. It is a Tier 1 gold belt. We've got some big monster deposits. Jundee to the north, Bronzewing to the south, bordering our Ironstone Well Barwidgee project. There's a lot of potential here for additional discoveries in the future. It's had a relatively short exploration history. Most of those large deposits were discovered in the late 90s, early 2000s. And the reason for that late exploration history is that the project area has quite deep weathering. There's parts that are covered in transported cover. We see depletion in the near-surface environment, and what that means is a lot of the sort of early prospecting methods wouldn't have necessarily been effective across the project. We're well positioned relative to existing mills and mining infrastructure. Existing resource at Flushing Meadows of 270,000 ounces is about 55 kilometres south of the Jundee mill. And just up on screen there, highlighting where Northern Star are sort of hauling ore to. Down to the south near Mount McClure, Aurelia, they're sort of trucking that down to Thunderbox, directly past our 180,000 ounce resources at Mount McClure. And then up north of our IWB project, just showing some of the satellite deposits that they're hauling ore from, and also the location of the Millrose acquisition that Northern Star acquired late last year for 60 million in cash and scrip. So we know they're hungry for ounces, and it's a big mill that needs feed. Ironstone Well Barwidgee, we know it's a really good geological setting. It's got the right structures, it has the right rock types. There's quite a conspicuous spacing of the major deposits across the Yandal Greenstone Belt. If you look at King of the Hills, Thunderbox, Starlet, Bronzewing, you're looking at a frequency of about 45 kilometres to 55 kilometres between those deposits, and then between Bronzewing and Jundee, you've got quite a large gap, and our Ironstone Well Barwidgee project sort of sits right in the middle of that, so we think we're well positioned. As I mentioned, it's quite underexplored. Complex regolith, transported cover, deep weathering with supergene often in the sort of upper part of the regolith, which means that gold gets sort of depleted in that near surface environment. And there's a lot of potential for modern regional data sets, so multi-element soils, more detailed gravity to sort of uncover new targets that may not have been considered in the past. And there's a lot of historic drilling here, but a large portion of that is relatively ineffective because it was too shallow, or they were sort of targeting the wrong sort of horizons within the regolith. We're taking a very scientific approach to exploration. We use what's called a mineral systems approach, which is basically looking at sort of at a broader scale the right kind of setting that's going to generate fluid flow and likely result in a large mineralised position. We then forensically go over the empirical data and use that to generate targets. We've brought in a number of independent consultants with a track record of exploration success to help develop some more conceptual targets. We then rank them and forensically go over any sort of historic data associated with them. And from that process, late last year, three prospects really sort of floated to the top. Those being Oblique and Quarter Moon, which are 2 advanced exploration gold targets, and New England Granite, which is more of an early stage conceptual prospect down towards the south of Ironstone Well Barwidgee. In tandem with that, more recently we've been acquiring those new regional data sets, and I'll talk to some of the targets that we've been able to generate from that more recently, which are really quite exciting. So Oblique and Quarter Moon are quite close to our existing resource out at Flushing Meadows of 268,000 ounces. We can see the potential here for a bit of a gold camp emerging, and to sort of highlight that potential, we've generated an exploration target of anywhere between sort of 300,000 ounces to 1.2 million ounces. As I mentioned, Oblique and Quarter Moon are advanced. We know there's mineralisation there. What we don't understand is the resource potential or the sort of the scale of the mineralised system, and we've been actively testing that over the last 6 months. We just finished an RC project across Oblique and Quarter Moon. The Oblique results were released Tuesday this week, and I encourage everyone to have a look through that announcement. Quarter Moon results will come out in the next couple of weeks. In terms of potential here, even if we sort of realise the lower end of this exploration target, we're potentially looking at a plus 500,000 ounce sort of oxide open pit camp. We know that'll be attractive to some of the large stakeholders in the region, and it'll be a really good opportunity for us to sort of monetise this asset quite quickly. If we achieve the higher end, then we're away. Just looking at some of the more recent results out at Oblique, on the left there we've got a long section just highlighting some of the sort of shallow oxide intercepts that we've got within the sort of more recently defined OBL1 structure, which runs in a northwest sort of strike through here. Really good results there, 24 metres at 1.8, 9 metres at 1.8, 28 metres at 1.2, seeing consistent widths and some relatively good grade continuity through there. A lot of the historic drilling through this prospect didn't actually test the full width of the structure, and you can sort of see that with some of those points there with the sort of grey circle around it. They're sort of ineffective tests where they've only just touched the top of the structure. So there's a lot of potential here for us. In addition to that, towards the north, we thought we did a little bit of exploration drilling, and we've got some good results there. So 15 metres at 1.7, 7 metres at 0.9. They're suggesting that we've got another OBL1 structure to the north, which adds a lot more potential to the prospect going forward. So very happy with the recent RC results. The sort of third key prospect that we're targeting this year is New England granite. It's earlier stage, higher risk, but in my view quite exciting with a lot of potential. We've got a large 4 kilometre by 2 kilometre intrusive. It sits within the Greenstone sequence. It's adjacent to a major regional structure. We see some late structures cutting into it. We know these late northwest structures are sort of a key component to the larger deposits within the region, like Jundee. The eastern margin shows a very broad but continuous regolith anomaly. It does an outcrop. It sits underneath 6 to 12 metres of transported cover. And we can see a lot of comparisons here with other granitoid-hosted deposits within the region. At the lower end, you've got things like Ramone, which is being actively mined by Northern Star, Montague and another greenstone belt. At the upper end, we can see some similarities here with King of Hills. That gives us quite a range in sort of target size, and that's reflected in our exploration target of 120,000 ounces to sort of 600,000 ounces. What are we doing here? We've got a diamond rig on site at the moment. It's currently testing Oblique and Quarter Moon, but right before it leaves site, it's going to drill 2 holes, testing the sort of eastern margin of that granite. That's co-sponsored by the WA State Government through the EIS scheme. That's going to tell us basically what the geometry of that margin is and allow us to design a more detailed RC program, which we'll sort of schedule for July, August this year. Moving out at a larger scale, we've always felt that there's potential for some really good discoveries in the Ironstone Well Barwudgie project. There's a lot of areas there where we see good coverage by sort of aerial magnetics, but the magnetic data isn't really showing us what's happening at depth at a sort of structural and a sort of stratigraphic scale. That's mainly due to paleo channels, transported cover, deep weathering. To sort of supplement those areas where we're not getting that resolution and can't really see what's going on at depth, we completed a ground gravity survey, and we're really impressed with the results. We put out an announcement regarding this a couple of weeks ago. It's identified 2 potential shear zones where no one had recognised shear zones before, but more critically, it identified a couple of fold structures, the sort of key one being the Caledon fold structure, which is this one here, and you can sort of see that to the south it's truncated by one of our interpreted shear zones. Now, if you sort of have a look at that structural architecture and compare it to sort of analogues in other parts of the world, you can see some very strong similarities to some well-endowed gold districts. So we've got Kalgoorlie, which hosts the Golden Mile, and the sort of Timmins Porcupine district in Canada. In both instances, you're getting folded, mafic stratigraphy truncated by major structures. Our folds of a similar scale, those images are to the same scale. It's a very early stage concept. We see similar architecture, but we're working very hard to sort of review this and understand its potential. But the team's very excited about it. So please keep an eye on us, and we're hopefully going to bring out a lot more news regarding this part of the world in the next coming months. So what are we up to at the moment? As I said, we've just finished an RC program at Oblique and Quarter Moon. We've released the RC results for Oblique this week. We're diamond drilling at Oblique at the moment. That should finish this week. It'll then move to Quarter Moon before heading down to New England Granite for the 2 EIS holes. Following the diamond drilling, we're looking to get an RC rig running out at New England Granite once we know the geometry of that sort of intrusive contact, and plus potentially some follow-up RC drilling at Oblique and Quarter Moon. On top of that, in terms of sort of regional work, again, we're doing those detailed reviews on that ground gravity targets, and we also completed a large soil sampling program earlier this year, and those results will be coming in soon and hopefully enhance or generate new conceptual targets for us going forward. Just a rough overview of the activity coming up in the next few quarters. The gold there is drilling. You can see we're going to be very busy, so plenty of news flow ahead for us. And hopefully I've managed to sort of highlight those key points to everyone here. I'd like to thank everyone for the time, and we've got our booth out in the sort of main venue, so if you have any questions, please come and talk to us. We'd gladly run through a few of these things in a bit more detail, have a look at a few more figures. If you miss us today, reach out, give us a call. If you're ever in Perth, say hello. But thank you for your time, and enjoy the rest of the conference.
Thank you, Chris. Well done. I still think it's a bit too chilly today, quite frankly. All right, team. Where are you, Janetta? You at the back there? All right, we're going to, as she walks up the front here, we'll talk about rare earths, because if you know, China remains by far the world's top producer of rare earths, crucial for batteries, electric cars, high-tech products. But others are enhancing their production capabilities, and to do that, we need companies like Godolphin. We need people like this woman in front of us, Janetta Owens, who is the managing director and who's made a very bold move this year, 2 of them in fact, and now has 100% of a rare earths potential site in her grasp, in her holdings. Now, would you please make Janetta and the Godolphin story very welcome this morning?
Thanks, Chrissy, and thank you everyone for hanging around to listen to this talk. So I'll just move through the slides. The disclaimers on our website, and this presentation will actually be popped up on there as well. Corporate snapshot, we have just been doing a small raise, which has put some pressure on our share price at the moment. So what I would like to point out on this slide, though, is that it's very unusual for a junior exploration company to have other ASX-listed companies in their top 20. We've got 2 in our top 5. American Rare Earths coming onto our register really was a tick in the technical capabilities of our project. I mean, they obviously understand rare earth projects and the benefits of clay-hosted rare earth projects. So we've been really happy to have those guys on board with us, and we work quite closely with them. Now, talking about our technical capabilities and our board, we do have a very experienced board. Most of the people have come out of big companies, myself out of Rio, BHP for some of our other directors, and we also have people that have taken a project from discovery through to actually development. So a very experienced board that really sets us in good stead. Investment highlights, you can read the notes there, but really Godolphin is a copper and gold explorer and a rare earth, what we're looking at, developer. Now, many people have sort of, thought, why did we get into rare earths? And I will run through some reasons why. But at the moment, in the political climate that we have, we see that it's really opportunistic to get involved with rare earths at this point in time, specifically clay-hosted, because the capex costs are much, much lower than a hard rock project. And with the political climate, being able to get a project into development, we feel is going to be much shorter time span. So from discovery to actually mining can take a number of years, and I've actually run the numbers, and on average for a copper gold project from discovery through to development is 20 years of development, which includes drilling and drilling it out, and all of those approval processes. So we think we can actually expedite that much quicker because there is that huge appetite from other countries outside of China to find these rare earth projects or rare earth elements. Now, on that note, we obviously have opened up channels of discussion with federal government and some of their organisations, and they've actually explained to us that countries like America, Canada, Germany are actually coming in the back end and trying to secure these resources at very early stages. So that scoping study or early development stages, and that's where we're really positioning ourselves at the moment. Now, we've all heard about it, right? China controls this market, so they also control the prices. And that's a real concern to other countries. And you can see that, we did have a downturn in the NdPr price, but it has been recovering in the last few months, and it will go up and down while China do control it. And that's why most of these other countries are really keen to decouple from China and be able to secure these resources outside of their influence. Now you can see the growth chart here. You can find this information on the Argus Media website. But basically, the demand from China and the supply from China will remain constant, but there will be this increasing demand to get these products from outside of China, from jurisdictions that are geopolitically stable, and Australia obviously fits in that scope, and New South Wales completely in that scope. Now, this is one of the reasons why Godolphin are really keen on continuing with the rare earth journey. So if we're looking at the demand volumes here on the pie graphs, so we're comparing 2022 to 2033, and you can see that the demand for magnet minerals is going to explode. And that's the market that we're in. We really are focused on those magnet minerals. And currently, China does actually control most of that market. In fact, they control 95% of the rare earth magnet market. And countries, again, we're talking Germany, we're talking the US, we're talking Canada, they need to get some of that supply out of China because they're used in not just electric vehicles and wind turbines, but they're also used in the defence industry. So looking at Godolphin in our tenement portfolio, you can see coloured in orange there is our copper and gold portfolio. That's centred around Orange and Gundagai to the south, which Gundagai is an old gold mining district. We have within our portfolio 4 MREs, so that's mineral resource estimates, so that's actually defined resources, which is again quite unusual for a junior exploration company. One of those is on our rare earth project and 3 within the copper and gold portfolio. We have Lewis Ponds, which is sitting at 6.2 million tonnes at 2 grams per tonne gold, and it has lead, zinc, silver and a bit of copper. We've got Mount Aubrey Gold, and we've got the Oval Copper Gold project as well. We work on those all concurrently, but do have a focus more on one that being the rare earths at the moment, that we feel that we can get into development. Development actually means that we can get some revenue back into the company to progress the other projects. So we talk about our flagship asset, and as far as clay-hosted rare earth projects go, it is a very confusing space for a lot of investors. The reason being we don't have any in Australia. There are no operating clay-hosted projects. Most of them are still in China, and obviously there's some development projects happening or exploration happening in Brazil. But what we've got here at Narrabri is a clay-hosted rare earth project. We drilled our maiden drill campaign 2 years ago. We put out our maiden drill resource, which is the 94 million tonnes at 739 ppm TREO with a higher grade core of 20 million tonnes. Now, when we think about taking this to mining, how many millions of tonnes do you need? On average, these mines probably only process about 5 million tonnes a year. So we've got a good 20 years in our first campaign. This resource is not confined, it's open in all directions. So we're not worried about the size of the resource. What we're worried about is how we can actually get it to production, which is one of the reasons why we have actually gone through and started our scoping study. We don't want to spend our shareholders' money making this resource bigger, but we can't get it out of the ground. We want to know that we can. So looking at the makeup of the rare earths within our project. So of our TREO, you can see that 24% of it is those important magnet minerals. And out of that, neodymium forms a large portion. But you can see the heavy rare earths, dysprosium and terbium, also make up a fair portion. So that number of 21% for dysprosium is actually very high and a very sought after mineral. Now, thinking about what these are used for, generally we use them in wind turbines, we use them in medical equipment, and EV cars. I once saw that the rare earth price dropped because Elon Musk said we're not going to use rare earths in the batteries anymore. Well, they don't really use much anyway. Most of it's in the electric motors. Now, a general combustion engine actually uses quite a lot of rare earth magnets because they're used in the electric window winders, in your air conditioning, in all of the functions that run your vehicle. So they actually use quite a lot already. If you look at a plug-in hybrid, we're going to increase that demand by probably 2 to 3 times. If we look at a full electric vehicle, we're looking at 4 to 5 times. So the demand for these products are going to increase just with that market alone. And then when we add on those other markets that are going to increase, as in the offshore wind turbines and the defence industry, there's still going to remain a huge market for these products. Now, the clay-hosted projects are very amenable to low-cost development. Now, I've often said there's 2 types of rare earth projects, hard rock and clay, and I want to refine that a little bit more because that does still cause confusion. There's 2 ways to actually get the rare earths out of your project. So one is by thermal and chemical cracking of your mineral. So that means that your rare earths are encased within a mineral and you have to do a lot of thermal heating and chemical cracking to break it open to release the rare earths. With a clay-hosted deposit, it's already the weathering of that clay, of the parent rock, to turn it into clay has actually done that for you. So they're actually already released from the crystals. And they actually sit on the outside of clay particles, so they get stuck on clays and stuck sort of within clays. And that's the kind of process that we've got going on here. So with our testing of how we can actually leach the rare earths off the clays, we've been able to achieve in our diagnostic leach test up to 95% recovery of these magnet minerals. And that's outstanding. That is diagnostic, so that's not actually what's going to happen in the mining when we actually mine this project, because we will go along and, scrape it up, we put it on a screen and maybe screen it, and then we will put it into a leach pad or a vat, and then we'll put the chemicals on to leach it. Now, I mentioned clay. Clay is vitally important for these types of projects. We actually had the New South Wales Government, the Geological Survey, after we drilled our 31 diamond holes. They came and collected it and high-logged it all for free. That is because we are the only clay-hosted rare earth project in New South Wales, and they want to be able to fingerprint it for other potential areas of growth. What that has enabled us to understand is what our alteration mineralogy is and how much clay that we do have. And from these, they're quasi-drill holes, you can see that there's a lot of clay. The red indicates all of the kaolin clay, which is important and what you need for these clay-hosted systems. Now, I would like to note out that our actual resource isn't the entire clay profile. So the clay does actually, and the rare earths continue into what we consider weakly weathered or the bedrock. But the mining process is that we can actually go and just dig it up and scrape it up, and the material that's included in our mineral resource is material that can be mined or dug or scraped up without having to use explosives. Actually, I'll just go back one. We actually did some QuenScan with ANSTO. So all of our test work has been done with ANSTO. Reason being is that they are industry leaders in that area. That was really, really quite was amazing, because we actually found out that our deposit has a mineral, a neodymium-rich lanthanide, that no other clay-hosted project anywhere in the world has. So that really does make us quite special, and that's why our neodymium levels are quite high within this project. So Chrissy mentioned that we now have 100% ownership of this project. We also picked up all of the ground around the project. So we've got a tenement package now about 50 kilometres north-south, about 25 kilometres east-west, and it hosts other A-type granites and extensions of the known project or mineral resource. When we actually did our mineral resource, we had to cut it by our tenement boundary at the time. It actually flowed out into the neighbour's tenement, but you can't report that. So we had to cut it off. So we know that the resource continues out in that area. We've actually done some work on some geophysics, so reinterpreted the government freely available geophysical data, and have been able to identify these fault corridors and these areas where we'll be targeting future drilling. So looking at what we're going to be doing over the next few months, we are going to be focused on the scoping study, and that will define the flow path and the flow sheet for the processing of these projects, of this one specifically, and how we can get to that mixed rare earth carbonate. We're going to produce the mixed rare earth carbonate so we can talk to our end users, and that allows us to do offtake agreements. And we should be having that work completed by around October. We, in the first stages of this study, Ausenco, who are our partners in this, identified a particular processing method that we might want to explore in a little bit more detail. So we've actually gone back and doing some more metallurgy work with ANSTO for that process as well. We're going to be doing some other work on our regional tenements around. So again, getting out, doing some air core drilling to define further resources and further projects. Looking at our copper and gold, we have recently put out an announcement about Spring Creek. We went out there, and I know Rob doesn't like rock chips, but it is the first thing you do. You go out, you look at the rocks, you send geologists out, they take some samples, and if it comes back interesting, well then you go to the next steps of doing your soil survey, which is what we have done. We've identified on an orientation line a gold copper arsenic signature, which is quite distinctive for porphyry style mineralisation, and now we've done a larger scale soil sampling program, and we're waiting for those results, so that will come in soon. Thanks.
Thanks so much, Janetta. Next up, 2 world-class copper porphyry projects in Ecuador being explored by gold and copper experts, Sunstone Metals. They're leading the team, walking to the front and walking us through this prospect is their newly anointed MD and CEO, Patrick Duffy. So why Ecuador? How big is the upside of these projects? Let's make him welcome and find out.
Thank you, everyone. Many of you may know me from Red 5, my previous company. I joined Red 5 2019. We were at $60 million market cap, and today, on the back of the success of the construction and development of King of the Hills, it's now a $1.6 billion company. I've joined Sunstone Metals because I see the same potential, if not significant upside at Sunstone. We have 2 world-class gold copper porphyry projects in Ecuador. The first is Bramaderos, more advanced than El Palmar in the south of Ecuador. It has an exploration target over 10 million ounces. It has a resource of the first porphyry system, Brama Alba, of 2.7 million ounces. And we're now drilling through a slightly different geological deposit called Limon, and working towards a resource at Limon this time next year. But expecting Limon will become our starter operation, potentially 100 to 150,000 ounces of gold and silver, which becomes a stepping stone to developing the much bigger multi-decade systems that we have with the porphyries at Bramaderos. Second project El Palmar is in the north of Ecuador. It's had about 10,000 metres of drilling. We have identified 5 porphyries. It's also shaping up as potentially a starter open pit mine, which becomes, again, a stepping stone to a multi-decade mining centre at El Palmar. I started in April, and the first thing I did was raise money, a small amount of money, $4 million, to give us a bit of time to get the building blocks in place and to get back drilling in Ecuador. That's now finalised. We have about $5 million of cash in the bank and well funded to get through this next drilling phase at Limon. Just to drill down a bit further, so Bramaderos is southern Ecuador. We fly from the capital, Quito, down to Loja and then drive an hour along the highway. That's the Pan American Highway that goes from Alaska down to Chile, so a significant highway that runs through Ecuador and runs through our concession. From my perspective, there's no red flags at Bramaderos. It's the perfect location to develop a world-class gold and copper mine. The communities are very supportive. No communities need to be resettled. There's no tribal communities in this area. There's no protected areas or native forest. We have access to water, access to the grid, which is 93% renewable power. So perfect postcode, and very confident we'll be able to execute the strategy that we have for Limon and for the broader porphyry projects at Bramaderos. The concession map here, you can see there's in the black circles is the porphyries that have been identified. There's already a resource at Brama Elba of 2.7 million ounces. And last year, acknowledging the difficulty of the market to raise the money needed to develop these bigger porphyry systems, the company pivoted towards Limon, which is an epithermal system to the right in the map, which is a faster pathway to operations. It's smaller capital, similar to what we achieved at Red 5, building King of the Hills, similar capital requirement, but a capability to get into operations, have the cash flow and the balance sheet to then develop the much bigger porphyry opportunities at Bramaderos. These two pictures tell a nice story. The porphyry at the top, the porphyries at Bramaderos are these porphyries that have protruded up and become weathered and now exposed as these outcropping hills full of gold, silver and copper, where we have the initial porphyry resource, and within 3-4 kilometres there's the other 4 or 5 porphyries. It only rains for 3 months of the year down in Bramaderos. It's very amenable to mining. In the bottom picture is Limon, which is in this valley, which is the epithermal. You can see in the background it's so heavily mineralised that nothing can grow, and it's a very big zone, 1.7 by 1 kilometre. We've already done about 10,000 metres of drilling at Limon, had some outstanding hits, order of 180 metres at 3 grams, 125 metres at I think 1.8 grams, but consistent high-grade results. We're now drilling in the western area of the zone, so we've moved from the central chute up to the west and plan to work our way back towards that central zone. In the last 6 months, we've been doing a lot of trenching. The trenches are 2 metres deep, perhaps 100 metres long, but identify where the gold and silver comes to surface, and we're now drilling under those trenches that have had some of these exceptional results. For example, 15 metres at 4 grams, I think, as high as 60 grams at surface in these trenches. Just to change it up a bit, you probably ask, where is Ecuador? What is Ecuador? I put together this simple GoPro video just to give you some appreciation of the country. It's a really, really beautiful country in the Andean Mountains. When you fly into Quito, you're at the capital. What struck me when I first went there, that half the plane was full of American university students who are there to holiday. It's a very safe, secure place. I think you're more likely to get shot in the US than you are in Ecuador. Our projects, again, just to emphasise, are in remote locations, no red flags, perfect sort of jurisdiction to be able to build a big copper gold porphyry projects. Same belt as where you find the world-class copper mines in the world, with Peru and Chile. Our workforce are incredibly dedicated, very, very capable, technically very strong. Again, just to emphasise the point, when you go to both projects, we only have one security guard that's on site, which reflects the low security risk that we have. The community's almost subsistence agriculture. There's no major disruption to agriculture from future mining. The communities are very supportive and want to see jobs created through mining in their local areas. You can see the trenches where you see the mineralisation coming through its surface. We're just up at El Palmar here, which is a more tropical climate than down south. But really, really beautiful country. This last scene is the capital, Quito, which is 3,300 metres above sea level, so right up in the mountains. Moving on to El Palmar, our project in the north. We can drive from the capital, Quito, 4 hours to the project. It sits on this Toachi fault zone, which has some major world-class porphyry systems. 15 kilometres away is a Codelco project with 1 billion tonnes, 0.9% copper. And further along the fault zone is SolGold with Cascabel, 3 billion tonne copper gold resource. And the same geological factors that have contributed to the mineralisation of those deposits are present at El Palmar, and is why the company picked up this concession 3 years ago. There's already been some drilling that has taken place at El Palmar, mostly focused on T1, and what we do see it already shaping up at T1 is a nice sort of potential open pit starter mine, similar to what we've described at Limon in Bremaderos, but potentially 150 to 250,000 ounces of gold and copper as an open pit that gets you into production, gets you the revenue and the balance sheet to be able to develop these deeper systems. There's a second message out of this slide. One is that next to the diagram here we have a cross-section of Cascabel at SolGold. If anyone here that knows the SolGold Cascabel deposit, it's deep, but you have to go down 700-800 metres to get to the high-grade zones. Has a capital cost of about $3 billion US to develop the deep underground block cave system at Cascabel. However, at El Palmar, it's just important to emphasise the advantage we have there is to be able to develop an open pit mine that we can afford as a growing junior developer to get into production, and then to be able to develop these deeper opportunities at El Palmar. Finally, just to touch on a third concession, Verde Chico, which is just adjacent to El Palmar, and ideally we'll be able to secure the land in between, but it serves purpose one as complementary land for infrastructure when we do develop El Palmar, and secondly is it's highly prospective in its own right, also on that Toachi fault. I've been working in gold and copper for the last 15 years with Xstrata and Glencore, more recently with Red 5, but I don't think there's ever been better conditions for both commodities. The geopolitical factors that have contributed to gold doing so well with their sanctions and countries buying up gold reserves will continue, I have no doubt, and also the expectation that rates in the US will start to fall later this year, all will contribute to a much higher gold price by the end of this year. And on copper, I think even back in 2008 when I joined Xstrata Copper, the company was forecasting then that this decade we would start to see a fundamental misbalance between supply and demand for copper. And back then it was all based on the challenge of finding and developing major copper mines in the world, and not taking into account what we now see with demands on copper for net zero and re-electrification of the US grid, etc. That is going to make it very challenging for the copper market to supply the copper demands going forward. Also have silver, which has also had a fantastic 3-6 months, and the same fundamentals are underpinning the future of the silver price. Just to wrap up, just to emphasise, we are drilling at Limon, and we're working our way towards a resource next year for Limon. We see it potentially developing as a 100 to 150,000 ounce gold and silver mine. Just as a comparison, having worked in Western Australia good comparisons are Capricorn Metals and Emerald Resources. Emerald's a $2.2 billion company producing, I think, 80,000 ounces in Cambodia with some nice upside. Capricorn producing 120,000 ounces, $1.8 billion market cap. We see Limon producing the same quantity of gold and silver, but we see it as a stepping stone to being a pathway to able to unlock and develop these much bigger porphyry systems at Bramaderos. And then on top of that, we have El Palmar, which over time we see a similar story evolving at El Palmar. So anticipating we'll see drilling results coming out in July. Very nice chance right now to get a position in Sunstone. And we expect to build a lot of momentum in the next 6 months. Thank you.
Thank you very much. I was just trying to do a little bit of sneaky research at the end there on our next presenter because I saw an announcement came up 25 minutes ago, so I'm trying desperately to get into their email. So I'm going to presume that this very smiley human being that's coming up here to join us now, oh, it's come up now. Oh, that's good. Catherine Cutler. And go. That's what I'm doing on the sideline. I'm just investigating Jet, the people that come up here to see if there's any new news. Are you enjoying this, Matt? All right, listen to this lady. She's got a lot of good information under her belt. She was part of the panel that was first up yesterday talking about copper, and so she knows a fair bit about it and what we need to do and how we need to explore it. So this is Kili Resources, everyone. You met Catherine yesterday, but let's hear about her projects and what she has to offer you with her company. Please make her welcome.
Thanks, Chrissy. Good morning, ladies and gentlemen. It's lovely to be here. Thank you to Vertical Events for hosting Kili this year. It's our first time presenting and being on the Gold Coast at this conference. We're currently actively exploring for a new copper-gold porphyry epithermal system in Queensland. So it's really great to be here speaking to Queenslanders about a potential new discovery in Queensland. Here's our corporate structure. Currently we're pretty tightly held. We only have 120 million shares on issue and a market cap of 5 mil. Goldfields has recently taken a stake in the company of 10%. Fairly tightly held with the top 20 holding 45% of the company. We've got 4 projects in the company. They're really big belt scale projects, 2 in WA and 2 in Queensland. I'm only going to talk about the West Tanami project and Mount Rawdon West because I don't have enough time to cover all of them. And that will mainly cover the deal we did with Goldfields recently, just about a month ago, and what our current exploration plans are in Queensland. So this is our West Tanami project. So the deal with Goldfields is a $13 million joint venture. We've got a fantastic belt scale project, about 1,600 square k's of tenure in the Kimberley of WA. It's really highly prospective for a new gold system, orogenic, large elephant size gold belt. Newmont's heavily engaged up there and has been operating for the last 20 years at the Cali Gold Mine, Dead Bullock Soak and the Granites, which you may have heard of before. The deal will see Goldfields spend in their first earning stage $5 million to earn a 60% stake. They'll then spend another $8 million to earn an additional 25% for a total 85% in that project. Kili will retain a 15% stake and a royalty over gold produced. As part of the deal, they also invested $500,000 into the company directly. So they're leveraged towards our copper or gold discoveries in Queensland at our projects there as well. So they cornerstoned the raising, and the additional $1 million was invested by our existing shareholders dominantly. There you go. So that $1.5 million worth of funds is going to go directly into our Queensland projects, mainly Mount Rawdon West. So this is a picture here of the terrain. Fairly typical, large big range. It's deceptively high. That's around about a 250 metre elevation, that hill in the background there. We're looking for a brand new copper gold porphyry epithermal system, and we believe we're in the right belt to find that. This is where we're located. So we're in between Gympie, Mount Morgan and Krakow. So these are all porphyry epithermal systems, really large gold deposits with existing copper as well. So it's about 18 million ounces of gold endowment in that little triangle there on the coast, just inland from Bundaberg. And about half a million tonnes of copper metal has been produced historically. This is what we're looking for. So we're looking for a porphyry epithermal system. This is a bit of technical jargon for the geos in the audience or listening. But what these systems really entail is you need a really solid geochemical model at surface, and you need a really solid geophysical model beneath the surface in which to target your drilling. So that's what we're doing. We're looking for these really large, low-grade, large tonnage systems. Our project covers 300 square kilometres of tenure, and it covers the two main mineralising structures. So Mount Rawdon, which is a 2 million ounce gold deposit, sits only 8 kilometres off our tenement boundary. That structure from Mount Rawdon extends all the way through the tenement, south-east-northwest, and it's transected by the Nichols Reward Sol Gold structure, which goes west-east. At that intersection, we've discerned two specific copper-gold moly anomalies at surface in soils, and they coincide with rock chips of 7.2% copper and 12.4 grams per tonne gold. Importantly, there's not one single drill hole on this entire 300 square kilometre tenement package, which seems a bit crazy for this area, considering it's got so many amazing big copper-gold deposits. But we see it as a really strong opportunity for the company. Again, this is a bit technical, but basically what it's telling you is we've done our work on the geochemistry, and what it's shown us is that we have a large copper-gold moly anomaly, but it's also hydrous and fertile for a potential porphyry-style system. So we are in the right belt, the geochemistry is all coming together, and looks like we might have a fertile system. And that's the two targets, so we're referring to them as Car and Baloo. If I zoom in on Car, it's a 1.8 kilometre long by 500 metres wide copper-gold moly soil anomaly. There's also old workings on the ground that extend 170 metres along a ridge, and on one side of the ridge there's adits, multiple adits all the way in along the ridge, and on the other side there's all the Windsors which have pulled out all the ore and waste historically. Now this is in 1905, so over 120 odd years ago. But in conjunction with those old workings, there's also been mapped a 120 metre long breccia at surface, which is really interesting. Copper's associated, we've got bornite veins at surface returning 4.5% copper, as well as some quartz veins returning 12.4 grams per tonne gold. So we have mineralisation at surface, a really nice looking target. What the next stage is for this is to then do a geophysical survey. So our geochemistry looks good. Next thing is IP, or a geophysical survey. Now the IP is a grid that's run on the ground, and it will cover the entire target area here and tell us if there's any sulphide-bearing bodies beneath the geochemistry on surface. And from that then tells us whether we've got a drill target. This is our Baloo target. This is much larger and requires further investigation. But we've again got 7.2% copper at surface with veins with bornite. It's 2.5 k's long, 1.7 k's wide, copper gold moly. It's on a ridge, and it remains completely untested. So Car and Baloo both have no drill holes in them whatsoever currently. So this is our plan. We're going to do these IP surveys. So as I said, it's a ground survey. It started this morning. The team is out at Car. They'll cover the whole ridge, and it will tell us what's beneath it. That then provides us with a drill target for future drill programs. There's a schematic there at the bottom. That's a cross-section through Baloo. The ridge itself is anomalous for copper and gold and has old workings, a VTEM anomaly, rock chips, and then the soils. But beneath that is what we really want to understand. Because it's such a large system, we want to find where the concentration is of those sulphide bodies. So the IP survey will do that. It will give us a 3D down to 300 metres depth geophysical model that we can then drill target in the future. And that's a small picture of the guys doing the work out in the field currently, as of this morning. It's a non-invasive technique, doesn't disturb the surface. It's just reading what the responses are from beneath the soil anomaly. Now, the Ravenswood North project, I'm not going to go through that because I'm going to run out of time. But we're up in the Charters Towers region, inland from Townsville. We're a long strike from the Ravenswood 8 million ounce gold mine. We've got about 660 square k's of tenure. We've developed 2 targets on that project to date. We've only drilled 11 holes. They're the virgin holes into a target at Rocky. And we're working on that in the background for drill campaigns next year. So if you want to know more about the projects we're doing in the exploration, I'm happy to walk you through that if you come to the booth, because I'll be here for the rest of the afternoon. So we've got some pretty exciting copper gold projects for Queensland. They remain completely untested. We're completing all the work necessary to provide solid drill targets for the immediate future. And it will be a really exciting 6 months for the company with a lot of news flow and a lot of exploration campaigns, which will eventually lead into a drill campaign. And you never know, we might just find the next copper gold deposit for Queensland. That's the plan. I'm at the booth for the rest of the afternoon, so if you'd like to come and hear about the projects or the exploration programs, please come by and say hello.
Catherine, did you want to see if anyone wants to ask a question? You've got 4 minutes up your sleeve. Did anyone have a question for Catherine at all at this point? Or would you like to go and join her at her booth and take your morning tea there and investigate further? All right, I think that's the plan. Thank you so much for that one. Thank you everyone for your attention this morning. Out you go, morning tea, and I'll ring the bell and run around like a mad thing in just a little while. Thanks everyone.